Good morning, ladies and gentlemen. I'm Inba, moderator for this conference. Welcome to the conference call of FINO Payments Bank Limited, arranged by Concept Investor Relations, to discuss its Q3 and 9 months FY22 results. We have with us today Mr. Rishi Gupta, Chief Executive Officer and Managing Director, Mr. Ketan Merchant, Chief Financial Officer, and Mr. Sayantan Mitra, Investor Relations. At this moment, all participants are in the listen-only mode. Later, we will conduct a question and answer session. At that time, if you have questions, please press star and 1 on your telephone keypad. Please note that this conference is being recorded. I now hand the conference over to Mr. Rishi Gupta, Chief Executive Officer and Managing Director. Thank you, and over to you, sir.
Thank you, Inba. Good morning and good afternoon to all analysts and investors who have joined us on the call today. Thank you all for taking out time to attend FINO Payments Bank Q3 FY22 earnings conference call. It was another standout quarter for FINO Payments Bank. Our transactions volume grew by 58% on a year-on-year basis to 18 crores. Our throughput value, including UPI, grew by 29% year-on-year to 49,168 crores. Our revenue in Q3 FY22 grew by 20% year-on-year to 275.2 crores. In fact, in the 9 months FY22, our revenue in absolute terms has already grown by 164 crores, which is much higher than our absolute growth in the entire FY21 over FY20. Lastly, our profits more than doubled over Q3 FY21 to 14.1 crores. We continue to focus on business growth with profitability. With the evolving scenario, our business is already seeing strong traction on the digital banking side. UPI throughput value by FINO Payments Bank account holders crossed 5,000 crores for the first time in Q3 FY22. We are growing this business very cautiously with limited spends on marketing. Our strategy on customer acquisition through merchant channel and then pushing customers towards digital adoption is also helping grow our digital business. We have also launched various loan products on pilot basis, and there is very strong demand for this in our ecosystem. Going forward, FINO's business will get categorized into physical channel and digital channel, with digital channel increasingly occupying the larger market share. Needless to mention, the digital business will have a higher transaction value and a better margin profile. All of these factors excite us with the potential future of FINO as not only a fintech bank but a pan-India digital bank. On the existing business lines, I would like to highlight a few notable milestones which FINO Payments Bank achieved in Q3 FY22. We touched February 20 or pre-COVID throughput levels in our domestic remittance business in October 21, which further grew in November and December 21. This implies that we have already recovered to pre-COVID levels in our domestic remittance business and now headed for further growth. We opened more than 200,000 FINO bank accounts in December 21, excluding our merchant accounts. For the first time in a month in the history of FINO Bank, the strong account opening trend is in line with our customer acquisition strategy or ownership strategy, wherein customers having FINO bank account can use the bank's digital platforms. This will give us an opportunity to cross-sell other high-value products. Our cash management business, which is also a cash-in facility to micro ATMs and APS business, crossed more than 2,000 crores throughput in December 21 and more than 6,000 crores throughput for the quarter. For the first ever time, the robust growth in our accounts of rapid additions of clients across different sectors of pan-India covering e-commerce, logistics, retail, agri-tech, cash replenishment agencies and others. Our UPI throughput, as I mentioned earlier, our spends by our customers, CASA customers crossed more than 5,000 crores for the first time ever in Q3 FY22, implying rapid adoption of digital mediums of transactions by our segments of customers. As you already know, we have also got an RBI approval to commence international remittance business under the MTSS scheme. India is expected to be the largest recipient of remittance globally in 2022. As per our estimates of World Bank, India is expected to receive $87 billion in international remittance in 21, and is further expected to grow by 3% in 22 to nearly $90 billion. And this business poses a tremendous potential for FINO Bank. We have a large segment of customers whose family members are based abroad and remit money periodically. Our ubiquitous merchant network can serve as a cash-out point to customers for withdrawing their remitted money. Being a bank, we also have the options to open bank accounts for customers so that their money can remain in a digital form. In quarter 3 FY22, we digitized cash to the tune of 18,310 crores through our cash management and remittance businesses. In quarter 3 FY21, we had digitized cash to the tune of 13,256 crores. This implies a growth of 38% on year-on-year basis in the cash digitized business of FINO Bank. We have also launched APS Cash Deposit, which is another cash digitization product. To transition into a true digital bank, catering to whole of India, we need to open more bank accounts. Digitize the cash circulating in the economy, and this is when the digital payment journey starts for our customers or our segment of customers. The strong UPI growth for FINO Bank implies this journey has already commenced for a section of our customers. And when a substantial pool is built, the true potential of digital banking model will start reflecting. We continue to add merchants very aggressively to our network. Our merchant count as on 31st December 2021 stood at 8.7 lakhs, up from 8.1 lakhs as of 30th September 21. These merchants are fulcrum to our product offering to the end customers on our existing physical channel. They act as the hook to FINO's financial offering funnel, wherein offers or other bank customers visit the merchant points to withdraw cash or deposit cash or transfer money. These merchants then then play a pivotal role in converting the customers to an honest customer by opening a FINO Bank account. And from here, the digital journey of the customer actually commences. We believe we are in a massive sweet spot. Our existing businesses are all profitable, generating healthy ROEs. All our customers are increasingly digitizing cash and rapidly adopting digital mediums of transaction. We are already seeing green shoots emerging in our cross-sell journey. However, it is still early days and we will cautiously monitor dispersal growth as well as collection trends before aggressively ramping up the portfolio. An advantage to us in our low network base, most of our cross-sell products will drive our bottom lines more. As a result, even on a conservative scale of business as compared to some of the other listed fintech players, our profitability can improve multiple times and we can deliver the best-in-class ROEs. Medium-term business growth focus is anchored on CASA and CMS. In quarter 3 FY22, our CMS throughput grew by 59% on year-on-year basis. We have also opened 19.5% more accounts in 9 months of FY22 as compared to the full year of FY21. However, what excites us more than opening accounts is subscription revenue that we are generating. In quarter 3 FY22, our net new account subscription revenue grew by a whopping 99%, while our renewal revenue grew by more than 3 times. This helped our overall CASA revenue to grow by more than 93% on a year-on-year basis. Our micro ATM and APS business is back to growth path in quarter 3 FY22, with the throughput growing by 10% sequentially. Both own channel and open banking channel margins continue to remain steady despite competitive forces. Remittance business surged substantially in quarter 3 FY22, demonstrating a year-on-year growth of 26% and sequential growth of 29% in revenue. To sum up, the highlights of quarter 3 FY22 would be: the massive growth in our UPI throughput is leading us towards an exciting digital banking channel in the near future. Our CASA and CMS business touched record heights in this quarter. Our revenue growth resulted in disproportionate growth in our PAT. I will now hand it over to my CFO, Ketan, to take you through some of the numbers and ratios. Over to you, Ketan.
Thank you, Rishi. Ladies and gentlemen, good morning and a good afternoon wherever you are. Let me start off with a statement. We are leaving no stone unturned in driving our business towards our long-term mission. While our UPI throughput, even in our pre-listing days, was showing healthy growth trends, we never imagined it would cross the 5,000 crore landmark with such a short interval. This validates our confidence in building a digital payment and digital banking ecosystem around our set of target customers, which is the emerging India or Bharat. It also resonates well with our credit-light transaction banking model. For us, next couple of quarters are more on customer acquisition, thereby creating a platform for future cross-sell. On some of the large numbers for the quarter and YTD 9-month period, I'd like to say, in 9 months FY22, our revenue growth is at 29%. We expect to cross 1,000 crore revenue in FY22. Our year-to-date PAT margin is inching upwards and has already touched 3.5% year-to-date, i.e. 9 months. Our 9-month PAT at 25.12 crores is 95% higher than previous year. In quarter 3 FY22, our PAT margin stood at 5.1%. Our quarter 3 FY22 annualized ROE stands at 18%. This factors the primary proceeds received in mid-quarter. If we exclude the fresh issue proceeds from IPO, which effectively got credited in mid-November, our ROE would have been at 33.5% for quarter 3 FY22. Coming to some growth and margin numbers, our Q3 FY22 PAT is not only 95% higher sequentially, but is also higher than the entire PAT in H1 FY22. This is explained by the strong sequential growth of high-margin products like CASA and CMS. On new subscription accounts in CASA, we generate a margin in excess of 55%, while on renewal income, we generate a margin in excess of 75%. And this is the annuity income which helps our business to grow and bring stability. While the new subscription revenue has grown by 99%, the renewal income has grown by 3x. On CMS, margin profile remains healthy in excess of 45%, and revenue has grown by 39% YOY. Going by trajectory in Jan 22, we believe that CASA and CMS will continue the exponential growth in quarter 4 as well. As a result, we believe disproportionate profit growth will be even more evident in quarter 4 FY22. We expect our revenue in quarter 4 to be around 27-29% higher YOY. Coming to our two key legacy products, which is micro ATM, AEPS, and remittance. I should confess out here that over last 3 months, I have been asked this question many times in terms of the stability of this product, the rationale of this product, and in certain cases, why low margin remittance business is important for us. I have repeatedly mentioned, and I submit once again, one of the biggest advantages in our business model is the organic footfall we generate due to remittance, micro ATM, and AEPS. This helps us to keep our customer acquisition cost zero and helps converting our offer customers to honest customers. These footfalls are mostly offers, and as I said, customers with other bank accounts and help us to convert. Our merchants convert them into honest customers by opening FINO bank accounts for them. As a result, we don't have to spend on marketing or customer acquisition as such. Remittance business generates massive organic footfalls across our merchant network, especially in urban areas. These customers get converted into FINO bank customers, as is evident in the CASA growth. Post-conversion into FINO bank customers, they can digitize their cash for free subject to certain limited transactions. And as such, UPI also becomes a key thing and a revenue-generating aspect for us. The same applies for micro ATM and AEPS as well. So we don't look at these products in isolation. They are very critical in our journey towards owning the customers. The business in the current quarter continues to reflect the strong momentum of quarter 3 FY22. Historically, we have seen that Q3 is a steep sequential growth jump over Q2, and then Q4 is largely flat or marginally up as compared to Q3. FY22 will be an exception to the extent wherein Q4 is expected to have strong sequential growth over Q3. This relates the fact that there is not much seasonality in our business under a normal non-COVID scenario as well. We've been initiating a lot of structural changes in our products and partnerships, like enrolling on most state government websites as partners for various schemes. This facilitates us to open more CASA accounts. offering passbook and checkbook to our customers, and many such more features which helps the emerging Bharat customers for banking with us. These steps are already uplifted the business momentum in December 21 and as evident from the record account opening numbers in December 21. CMS and throughput value, as earlier mentioned by Rishi, continues to reflect that trend as well. We would have loved to give you some exciting update on traction of our cross-sell, but as I said, our current spree is more on the customer acquisition and creating a base for cross-sell, and that play will come into the picture over 2-3 quarters from now on. Having said that, we have rolled out our revamped mobile app, FINO Pay, which continues to be marketed by our brand ambassador, Pankaj Tripathi. I would urge all of you to download this app and experience FINO's digital offerings. We will be investing proceeds of IPO to add more exciting products and features onto the application and other digital initiatives in the time to come. We are also planning on setting up a specialized in-house digital team. We will be onboarding some excellent leaders in the space from the market. We have ambitious plans to scale up our digital business. We are also in the process of quantifying our business allocation between channel and digital over a 3-year horizon. We will be coming with some interesting updates on all of these within the next couple of quarters. On a good note, I will leave open the floor to questions. Both Rishi and I will be happy to take any questions from here on.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may enter star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Shreya Shivani from CLSA. Please go ahead.
Hi, thank you for the opportunity and congratulations for the great set of numbers. I have 2 questions over here. My first question is on the NAPM and AEPS report. Specifically the NAPM report. It declined further in this quarter, right? It was at around 69 billion in first quarter, 61 in second quarter. Now it's gone down to 59. So if you can talk a little bit about what's happening here and what kind of recovery, if any, do we expect to see in this line item. And second thing, if you can talk about your product cost as a ratio to the total revenue. So usually in the past couple of quarters, so whatever data I have, it's been at around 67% for the quarter. But this quarter has gone up to 70%. So I wanted to understand what exactly has changed in your revenue sharing with your merchants, or how has this number scaled up 3 percentage points over here? So these are my 2 questions. Thank you.
Yes, Shreya. Shreya, let me just take your second question first. Product cost is essentially a function of the product mix as well. We are, and our remittance growth, which has been increasing with in pre-COVID times, remittance was a product which got impacted, and then now we've come to 100% of the pre-COVID level as well. So product cost, essentially, the growth is a function or is due to the remittance cost and as also open banking growth which we are seeing of. In regards to how do we see this happening, as I said, our margins currently are in the range of 32%, and we intend to maintain that in a range-bound manner. One of the emphasis out here is also that as and when CASA and CMS, our growth drivers further increase, the momentum which we've seen over last month or 2, that will further enhance our overall margin coming through. However, we will continue to balance remittance and micro ATM AEPS will continue to drive a footfall for us for eventual conversion. That is the answer to your point on product cost and margin overall level. On your first point, if I understood your question right, I think the line was a bit challenging, but you're saying how do we see micro ATM and AEPS shaping up? Is that your question coming up, right?
Yeah, the micro ATM throughputs have been declining quarter on quarter. So what is the challenge over here, and how are you trying to overcome that challenge? Because that is the one line item where your revenue growth is sort of slower. It's only at 13% versus other revenue lines. where you're still doing very strong numbers. So the challenges and how you're going to cope with them.
So if I mention about micro ATM and AEPS, the throughput for this particular quarter is 14,356, vis-a-vis the last quarter, which was around 13,068. Now, to answer your point, is it an important product? It is absolutely an important product. It generates a own channel margin in the range of 50%. The ups and downs, etc., keep on happening. This is largely a function of how the seasons in the market also happens. Sometimes in festive season there is a higher throughput which is coming off. So there is a behavioral pattern which is essentially coming. From our perspective, these continue to be important products from a growth, and we will continue to push the envelope on this as well. However, as I said earlier, these are relatively mature or legacy products, and these will continue to grow at a moderated rate in the guidance which we have given earlier. But this will generate a lot more cross-selling opportunity for us to come. Our focus on micro ATM and AEPS continues to grow from here on as well in quarters to come.
Okay, sure. Thank you. That was it from me.
Thank you. Our next question is from the line of Renish Bua from ICICI Securities. Please go ahead.
Yeah, hi, and congrats on a good set of numbers. So just circling back to what Shreya has asked on the gross profit margin, sir. So I think essentially the increasing pie of this open banking, the revenue share, which is now almost at 35%, and that is what actually dragging down the overall gross profit margin. So sir, is there any internal, let's say, target or limits we have around revenue mix going ahead? Because if that pie continue to increase, this downward trajectory will continue.
Yeah. So Renish, sorry, Rishi, you go ahead.
So Renish, our open banking strategy is more driven from the fact to get a higher market share. It is also driven by the fact that if we partner with any entity on one product, we are also ability to bring in other products. Say if we start with remittance, we can add APS, we can add CMS, we can add micro ATM also as a cross-sell opportunity along with the one product relationship which we have. Our range in which we are working on the open banking platform is somewhere around between 33 to 37% is something which we think is a good range to be within that range of 33 to 37%. But having said that, some of the products which we are seeing, remittances, for example, is growing more on the open banking platform because of the vast reach of our partners, especially on the urban side. And we are using the same partners for CMS and other businesses as well. So it's part of a well thought out strategy to grow our open banking platform along with our own channel platform, because end of the day we want to service as many customers, and through this process we'll be able to get a lot of customers onto the platform, and then our ability to cross-sell over the next few years will improve substantially.
Got it. So sir, I mean, let's say if we are working with a 33 to 37% kind of a band, so we are pretty much there currently. So is it fair to assume that gross profit margin have bottomed out at current level of 31%, or do we force some moderation from current level as well?
So our guidance in the past has also been that our gross margin will be range bound. So within plus minus 2%, I think we'll be working in that range is what we would expect going forward as well.
Sorry, sir. Can you?
Some of our new products also, some of our products like CASA is also improving the gross margin percentage. So I think within a plus minus 2% range, you can expect the gross margin to be in the future.
Okay, so 31% plus minus 2% is what you are saying, right, sir?
Yeah, you can say 32 plus minus 2%, so between 30 to 34%.
Okay. Okay. Great, sir. And sir, just last question, this bit on the strategy side. And so when we say a cross-selling, of course, it will be financial services products. But in, let's say, to start with, we'll start with the loan products or we'll start with the investment products?
So loan products, we have already started in some pilot locations, and we are seeing a good traction on the loan products. We have to fine-tune the products. We have to also see the collection ratios and how the disbursements can accordingly move in the times to come. So from our existing products of liabilities, as you know, CASA and some other products are also there. We are quite good on the payment side. We are also tied up on the international remittance. Credit is something which is going to come first, and then we are looking at investment products, which is mutual funds and could be gold and digital gold. We are waiting for approval from Reserve Bank on some of our products, especially FTRD mutual funds. International remittance we have already received, and digital gold also we have received.
Got it. So, sir, any timeline when will this international remittance product will be live?
So we have already in the final stages of signing the agreement with one counterparty on the MTSS side. We are expecting that along with the signing, we'll also start on the technology integration aspect. Our slated timeline is in the first quarter of FY23. We should be able to go live with the product.
Got it, sir. Got it, sir. Thank you and all the best, sir.
Thank you.
Thank you. A reminder to our participants, if you wish to ask a question, you may enter star and 1 on your touchtone telephone. Anyone who has a question may enter star and 1. Our next question is from the line of Jayesh Gandhi from BNP Paribas Mutual Fund. Please go ahead.
Good morning, and thank you for the opportunity. Am I audible?
Yes,
very good.
Okay. A couple of questions from my side. First and foremost, in the last call, we mentioned about the competitive intensity in the micro ATM placements in North India that the company was witnessing the first half. How is the situation now, and how do you see the outlook over the medium term in terms of this micro ATMs, the placements to the merchants?
So, the intensity on micro ATM, especially on the device pricing, which we mentioned last time, continues in the market. We have also planning to launch our new device in this quarter, which will kind of take benefit in terms of the pricing. This is a lower price product, which should help us in gaining some market share because of the low pricing which is offered by the other competitors. As you can see, we have grown in this quarter, and margins have been more or less constant. In fact, it has gone up marginally. So we will continue to play that participation on the competition, especially on the micro ATM and APS. In some geographies where there is intense competition, we'll match the competition, whereas in some other geographies, we will try to manage our margins better. But yes, the intensity, as you asked us, is continuing, and I don't expect that under another few quarters it will probably taper down. It will we'll all adjust to the new pricing, and everything I think will move in that direction.
I understand. So is the funding for the competition largely coming from banks, or is it NBFCs, or because obviously to keep on funding this devices, we of course require deep pocket.
So some of them are, I would say, are funded reasonably. I would say not to that level, but reasonably they are funded. I think they are also looking at the numbers in which they want to give out those devices at a lower price. I don't think so. They are getting funded by NBFCs or banks. They are largely funded by their own set of investors and stakeholders.
Oh, fintechs, I guess. Okay, great.
Yeah.
Fair enough. And the second question I had is on this opportunity that we have of international remittance. We all know that India is one of the biggest markets worldwide for remittance. But this seems like pretty well, entrenched market for the bank. Banks have been, doing this business for many, many years. What is our proposition, or what is our ability to take some market share out of these banks and do this business in a profitable way for us?
So it's a very interesting question, Yeshbhai. So a couple of things on this international remittance. International remittance total business is about $90 billion, of which about 25% or if it comes to MTSS, which is largely non-banks. You can look at Western Union and some of the MoneyGrams and other RIA and other parties who manage about 1/4 of the remittance from a non-bank channel. Our focus is currently to look at the non-bank channel to start with, and then do some more tie-ups on the other side where we can do direct international remittance. Our forte comes from the fact that these remittances are largely in 4-5 big states: Kerala, UP, Bihar, Punjab, Gujarat. And we have a very entrenched, deep network of merchants in all those states, and we are quite well known in that ecosystem. Apart from the fact that we are also started to see that largely these traditional money transfer companies incentivize people to withdraw the money immediately when the international remittance is hitting their system. Whereas in our case, we have a twin benefit. We can offer a bank account. So the money can be kept in the bank account and doesn't need to be KYC'd every time when you withdraw the money. So one time KYC, and then you can open an account and keep the money in the bank account and withdraw it at any point of time. So both are product offering on opening an account as well as giving them cash option, as well as our deep penetration of merchants, some of them who are already international remittance player also, gives us that added advantage to get a higher market share in this business over the next 3 to 5 years.
Wonderful. Any aspirational target for 3 years out?
So, Yeshbhai, we are looking at 5% of the MTSS market as our aspirational target. It's a good ask. It's a fair ask, I think so. And hopefully, with our network and our superior offering, we'll be able to capture a market. We'll be able to capture a larger market share.
Oh, 5% is $4-5 billion. That's a pretty sizable number. All the very best to you on this. Hopefully, this throws open a new avenue business model for us for the future. My last question is on basically a housekeeping question.
One more thing, Yeshbhai. One more just to add to this on international remittance. See, what happens is that when a merchant or a customer gets money in his bank account, his ability to cross-sell and other products also comes up. So our international remittance strategy is not only limited to just a product, but also opening a bank account and our ability to bring in other products also to the same customers. So you can say it's a three-pronged strategy which we are looking at. Our objective is to increase as many footfall into our merchant network.
Well, good to know that. Great. Yeah, my final question is on the balance sheet. So because we have a bank as a subsidiary in our consolidated numbers that we put out, it is very difficult to understand the operating cash flow number because of the deposits coming in and the various money flow because of the payment bank. Is it possible for the team to give out the operating cash flow number on a quarterly basis or a half-yearly basis so that we know how much of the profit or EBITDA is converted actually into operating cash for us?
Yes, I think that's a fair ask. While ours is not a balance sheet business, but our cash accrual, even before in the pre-listing days, has been sufficient enough to meet our expenses, as I said earlier. What we will do is we incorporate in a summarized balance sheet or the operating cash flow in the future investor presentations.
Thank you, and all the very best to you guys.
Thank you. I appreciate it.
Thank you. Our next question is from the line of Chandrasekhar Sridhar from Fidelity International. Please go ahead.
Hi. Good morning, gentlemen. I had three questions. One was, when you said that you'll keep broadly gross margins constant, is that a function of the share of open banking going up? Is it being driven by that? Or because ideally with favorable product mix, your margins should be trending higher? Or is it because you're seeing pressure in segments like remittances and micro ATMs where margins are going down? So the improvement in margins because of CASA and CMS, are offset by the slightly lower margins which you have in this. Is it product, one offsetting the other, or is it the share of open banking going up? That's question one. Second, if I look at the renewal rates in your subscription accounts, you've basically made about 8 crores of subscription revenue renewal this year, and this should sort of correspond to the income which you made last year on savings bank account, if I'm not wrong, which is about 8.4 crores from 12 months ago. So it seems like you made almost all of what you made last year by new savings bank account this year from renewal. Obviously, you've hiked your your savings bank account charges, but maybe you could just share with us how much of that is just coming from a renewal rate. What's the renewal rates and how much of it is coming from the charges? And thirdly, just on the sustainability of this micro ATM and the AEPS revenues, I noticed that the transaction revenues haven't actually increased much, but the subscription, the onboarding fees for merchants have gone up. I'm again trying to understand the sustainability of this, because if you're onboarding revenue merchants, but the transaction per merchant is not really stepping up, are the onboarding revenues in themselves sustainable? Thank you.
So thank you, Chandra, for your questions. Chetan, I will start, and then probably you can add to the point. So the first question, Chandra, was in terms of the margins which are there. Is it because the margins are getting impacted to some extent because of open banking, or the product mix within our own merchant own platform? So I would say the answer to this is somewhere in between. It is both. The open banking margins are lower, because of which our gross margins also gets impacted. One, and secondly, also the remittance share probably would have impacted some of our gross margin on our own basis. But our new products, which is your CASA and other and subscription, is kind of offsetting the drop in margins, especially on the own products side. And the remittance business, obviously, as it gains more and more percentage, the margins are lower on that side. So that's the answer to the first. Ketan, you want to add anything to this?
No, Rishi, I think you fairly covered the thought process around margin.
Chandra, your second question was on. Repeat that second question.
Yeah. So your renewal income from subscription was 8 crores this year.
Yeah, renewal. Yeah.
Last
Okay.
year.
The renewal. Yeah. Okay. The renewal income, actually, the renewal income for this quarter is not only reflecting of the accounts we opened in the quarter year before this. So it is an accumulation of previous few quarters also, which gets paid. Some of the additions which we did in this quarter last year would come in our next quarter. So it is not you can't match it to the quarter basis. So it's an accumulation which is happening. Roughly around 55 to 60% is the renewal rate which we are seeing on our ecosystem as far as subscription products are concerned. But matching it of accounts opened in the previous quarter versus this quarter may not give you the right desirable numbers, because normally the renewal doesn't happen in the same month. It may happen over the next normally 3 to 6 months.
Sorry, just to understand this a little better, is that I would presume that so you have subscription charges on quarterly as well as 6 monthly. So it's not like it's a 1:1. I thought that this was typically a 1 year subscription. So the subscription renewals from
So
matched.
So I'll tell you. I'll give you an example. So if somebody open an account in October of 2020, his renewal will be due in October of 2021. But it may not necessarily be that he renews it in the same month. He might renew it in January, February, or December. Or somebody open an account in September of last quarter may pay us in October to December quarter of this year. So while the account becomes accrual, but the payment is something which we look at when we account for in the income side. So it is only when the customer pays is when we look at as a subscription renewal income.
Sure. And what is the average realization per subscription account right now?
So about 55 to 60%, you can say, is the accounts which are getting renewed on a yearly basis.
Yes. And what is the realization?
Let me take that one, Rishi. 2 points out here, Chandra. One is the realization, as we said, in the year one, our essential margin is in the range of 55% for subscription. When we come to a renewal, the margin, because we do not have some incidental costs like plastic, etc., coming, our margin or the realization rate goes up to somewhere in the range of 70-75%. Also, remaining on the renewal rate, Rishi earlier alluded that our first year renewal rate is coming in the range of 55%. Now that we've entered our second year of renewal cycle, the people who are renewing it for the second time is more than around 75%. And as we go into FY23, at some stage in the later half of the year, we will be going into the third year as well. So for us, it is about accumulation of renewal of customers on a year-on-year basis. So this is where our statistics currently right. First year renewal rate 55%, first year margin in the range of 50-55%. Second year renewal rate is around 75%, and the margin for renewal is in the range of 75%.
Yeah. Ketan, I think the question was what is not the margin, but basically what are the average subscription charges which you realized this quarter?
Oh, okay. Average subscription charges is in the range of around 320 or 330.
Right. And the ceiling to this will obviously always be as you benchmark with the cost of a savings bank account. So that would be around, in any case, some of these accounts will have 455, 600 rupees of charges. So that would be the ceiling to which you can get up to.
Yes, typically, our highest variant is around 449 rupees or so. That we will be evaluating with that. Yes, it has to be making economic sense between the saving accounts for us and the rest.
Sure. And then just the last question, which was on the share of onboarding revenues and MAT and AEPS has gone up.
So micro ATM and APS, the onboarding revenue is largely related to one project which we are doing in UP, which is BC Sakhi. And so that is where the onboarding revenue has gone up. But those merchants which we have added on those in those geographies, especially in UP, would start transacting in this quarter. So being it's a semi-government kind of a project which is there. So the onboarding happens much in advance, as the transaction flow happens a little later. So that is where you would see there is a marginal higher number on onboarding, specifically related to only one project which is there. Otherwise, it is more or less in line with the other numbers.
The idea is this should eventually flow into transactions, right? That's the whole idea.
Yes. But it takes a little time. In a normal onboarding, it takes a couple of merchants to come up and ramp up transactions. In some of these projects where government is an anchor customer, it takes a little longer to happen as such.
Sure. Thank you.
Thank you. A reminder to our participants, if you wish to ask a question, you may enter star and 1. Our next question is from the line of Sushmit Patodia from Motilal Oswal Asset Management. Please go ahead.
Hi, good morning, Rishi. Good morning, Ketan. Congratulations on the result.
Good morning.
Hi. So my question is on merchants. If you can give a little more texture color around merchants. They have grown 50%, all banking merchants. What is the active ratio? How do you track them? What are the numbers like? What is the drop-off rate? If you can give us some color on that, that would be very helpful.
Ketan, you want to?
Sorry, Sushmit, I missed your question. Maybe some issue in my line, but if you don't mind just repeating it off.
So we have 457,000 merchants, which has grown 50%. I just wanted to understand if you can get some more color on them, which is, how many, what is the drop-off rate? What is the, let's say, 1-year active ratio, and so on, and how that has trended? Because this is the nodal part of our business.
Yeah, Sushmit, thank you. Typically, on the own channel merchant, which is 450,000 or 57,000 odd merchants, typical active ratio is around 70%. So 70% of them are generating income out of for themselves and for us as well. And that active ratio, in my view, is decent given the expansion which we are doing it off. Now, in terms of the entire merchant proposition, okay, Rishi earlier in one of the questions also alluded, what are we doing it off? And one of the gentlemen also asked about micro ATM. So our endeavor is to have more and more merchants doing multiple products coming through, so that it increases their suite of products. Okay, so someone who is doing remittance, we are, in addition to conversion into a CASA account, we will try and see that, if we can do a micro ATM and AEPS as well. So from a strategy perspective, we are going into two-pronged. The kind of growth which we are looking at, over the next 3-year period, or maybe a 3x kind of a growth on overall merchant, on a total acquisition of merchant, plus a merchant doing more in terms of what he essentially, the product which he's doing it off. Currently, I think a merchant typically earns somewhere in the range of around 1,200 to 1,400 rupees. I think our endeavor to giving in more products, including in the future like international remittance and the loan facilitation, etc., is to up that on a very structured basis. And we will continue to grow our merchant base, as I said as well. Rishi, you may want to add any other strategic aspect which I have missed out.
No, I think you have covered it well. Okay.
And the other aspect on merchants is, if you can tell us the Pareto in this, would the top 20% of the merchants account for 80% of the business, or is it more widespread or skewed?
Yeah, Sushmit, I think that's a very typical business. Definitely, it's 80-20 ratio is essentially working out for us as well. So, the 80% of the business essentially comes from, top 20% of the business. I would also like to actually add one more thing. We started a very differential merchant, and if I'm not mistaken, I'd mentioned in the earlier calls as well, we call a FINO Hamesha merchant, wherein the registration itself, is in the range of 100,000, and these guys end up generating income as high for themselves, income as high as in the range of 50,000 in the for themselves. So we have categorized our merchant into platinums, gold, silver, and bronze, and so on and so forth. The current business mix is in the range of, I think it is 80-20 rule is applying it off. It is more like 77 and 23, if I'm not mistaken. That's how the business is essentially coming up today.
One point which I would like to add to Ketan, Sushmit, is that while on an overall revenue, it would be probably 77-23. But what is important trend which we are seeing is, and which is something which we are now even pushing more, is some of our merchants may not be on an overall basis, may not be selling all products, but they have kind of picked up a few products. Like some of our merchants have really picked up CMS quite well. So they are focusing more on the CMS. Somebody has picked up CASA as one of their flagship products. So while on an overall basis, it could be 77-23. But from a product point of view, we would see a more diversified merchants doing different kinds of products. So largely merchants who are doing higher domestic remittances as well as micro ATM and APS, they contribute a higher revenue share to the kitty. But I would say CMS and CASA merchants numbers are also growing up quite substantially. And they are kind of niche merchants who are focusing on a couple of these new products.
Got it. Thank you, Rishi. And my last question is this, the operating cost has fallen quarter on quarter while we continue to do investments in the business. So I wanted to understand, have we reached the peak of operating costs, or is this just a blip and this should start increasing again?
Ketan here. Operating cost has marginally gone from quarter 2 to quarter 3. Quarter 2, we have done some enhanced marketing activities as well. I think the important aspect, as you mentioned it out, is that we continue to invest into the business from here on as well. So I would not say it is essentially peaked. We will continue investing into digital as well as feet on street in some of the geographies, specifically in East and South. Having said that, I think operating leverage is will keep on increasing as well. So the additional cost from here on would be driven by the business tier which we want to do, the branding which we essentially want to do, the marketing which we want to take through, and additional people which we want to deploy off. And as we go into more technology and digital investment, there will be amortization of cost also which will happen up. So I would not say it's peaked, but the operating leverage will continue to come, what we are seeing out here.
All right. Thank you and all the best. Thank you so much.
Thank you very much. Highly appreciate it.
Thank you. Our next question is from the line of Hiten Jain from Invesco. Please go ahead.
Yeah, hi. Can you give some color in your BC banking business? There, the revenue seems to have this.
Yeah. So, Hiten, in BC banking, if you recollect in our earlier projection as well, this is a B2B business. This is subject to some of the contracts which we are essentially doing it off. We have a couple of banking contracts. So this is on an ongoing basis is expected not going to be a growth driver. Currently, we have seen in one particular bank some sort of slowdown which is happening, which is not a strategic slowdown, but a more fundamental slowdown in terms of they revisiting a particular regional strategy. So that's where the B2B business or the BC banking business is sort of flattened out.
So is it fair to say that so how should we expect this business going forward in terms of growth rates? Right, obviously it will grow slower than the other products, but should we expect growth in this business going forward, or what should be our expectation about this business?
So the way we are seeing it off is this would be largely the growth will definitely come through, but it will be largely in a single digit growth and substantially lower in terms of a couple of other businesses like CMS or CASA growing, which are exponential growth. It may even be more moderated as compared to growth in terms of micro ATM and APS as well. That's how we have strategized the entire business. On an absolute basis, it will go through. On a percentage basis, I expect it to be on a single digit number.
Understood. And the second question was, if you can, while you spoke about new products, but if you can give some more color about it in terms of what should be the timeline and which products will, so which is your next one or two new products that you intend to drive, and what would be the time frame that one should expect? What's your strategy around that?
So, Ketan, let me start and probably you can add to it. See, on two products which we have recently started, Aadhaar Pay and APS cash deposit. This we have started in quarter 3 of this year. We should see ramping up of this happening from quarter 1 or quarter 4 of FY22 onwards. So these two products, as the product, I would say awareness becomes bigger, we should start seeing this on this. What we are also doing on the CASA side, we are enriching our product by adding passbook also in this quarter. So with passbook, we are expecting a larger section of population to also look at CASA of the FINO Payments Bank. So these are a couple of things we are doing on the existing products. On international remittance, as I mentioned earlier, we plan to go live in Q1. Credit on customer as well as merchant, we are still piloting. We want to understand the collection behavior better before rolling it out pan-India. We are also tying up with a couple of more NBFCs and fintech companies on the lending side, which will take another quarter or so. So we should start seeing more traction on the lending in Q1 and Q2 of FY23. Apart from that, digital gold is something which we have received approval from the regulator. That also we will be probably launching in Q1 of FY23. Mutual funds, FD and RD, we are waiting approval from regulator. Once we receive the approval from them, I think it will take a quarter after that to launch those products. There are conversations going on with the regulator right now, and it should happen anytime or may take a few more months to happen. Ketan, you want to add anything if I missed out?
No, Rishi, I think you fairly covered everything.
Okay, that's useful. And the last question from my side is on CASA. So you said that there's some 50% kind of renewal rate. And if I just think about the Pradhan Mantri Jan Dhan Yojana, so that covered a large part of section of the customers for the CASA. So then, so if you can give some color in terms of your customers, is it a second account for them, or largely a majority of them it's a first account, and what is the potential for increasing this over say next 7-8 years?
So I believe the CASA strategy of FINO specifically is very differentiated from other public and private banks. I'll take you through this entire journey. See, what happens when you open up an account under Pradhan Mantri Jan Dhan Yojana, it's a zero balance account, but it has its own complications and limitations. So you have to go to the branch, you have to go to their ATM and withdraw money, and it takes a lot of time as well as cost to do that travel, as well as time which goes into going to a branch and withdrawing money. So people, while through the camps and through the melas, the public sector banks have opened up lakhs and maybe millions of accounts under Jan Dhan Yojana, but large part of them continues to be maybe non-active or very limited value of transaction. And these are opened in the last 5-6 years. So what FINO proposition is, FINO brings in the convenience and servicing at the local neighborhood level only. So, and for that, the customers have to pay around 449 rupees including GST. So that money they pay, but then they get the convenience of being serviced at the local level, and that is something which we are valuing it even more. So our proposition, and that is why we believe the accounts will continue to grow, is because the value prop which we are able to bring to our customers, both in terms of convenience of opening an account as well as getting service at a local neighborhood at their convenience. So this will continue to lead to growth in our CASA numbers.
Okay, all right. Thank you so much.
Thank you. Our next question is from the line of Renish Bhuva from ICICI Securities. Please go ahead.
Yeah, thank you once again for taking my question. So also just one thing on the transactional revenue. So let's say if we look at the RBI data on the device deployment, our incremental market share is sort of around 35 to 36%, versus outstanding market share of close to 50%. And we have seen a couple of other banks like Yes Bank, State Bank of Mauritius, etc., tapping this micro ATM pretty aggressively over last 4 to 6 months. So does that the reason why a transactional volume is being shifted to a competition, and hence it is impacting our revenue, or is there something which we are not able to figure it out, sir?
No. So the reason is, see, when we entered the market, we were the pioneers of the product, especially on the micro ATM side. APS, we entered the market maybe about a year or so later than other banks entered, and we have about 11% odd market share on the APS platform. So both in terms of being the pioneers and now we have more people entering, our market share is definitely expected to go down because more and more players will keep on entering into the market. And I think the market itself is growing. Moreover, as Ketan mentioned earlier, these are full products for us. And it's a good momentum which has got built up around that. So while our market share may come down, it will come down because of more and more players coming in and aggressively, I answered that question earlier, aggressively undercutting and reducing the margins, whereas we have been holding to our numbers, and in fact it went up by 10% this quarter, and our margins have also marginally gone up. So we don't want to play that strategy of unnecessarily reducing the margins and gaining a market share. We'll rather continue to play the game of getting a good momentum on this product, as well as converting those customers into our own customers on CASA. So some of the numbers which is also may not get reflected here and difficult to figure out is that some of the customers who would be coming to us from micro ATM and APS now would have become FINO customers. And now once they become a FINO customers, any transaction they do, it doesn't get reflected on the micro ATM and APS at all. It goes into FINO's own transaction volume. So that could also be one of the reasons where it could be some marginal shift in terms of the transaction from offers customer to honors customers. But we will continue to focus our strategy of converting offers customers to honors, and that strategy, as you can see from the numbers, is working out very well.
Got it. So, I mean, sir, it is fair to offers to honors conversion ratio will be improving quarter on quarter. And any ballpark numbers you would want to highlight? What could be that ratio currently?
We added about 2 lakh customers in the month of December. If around 2 crore people visit our platform every month, roughly we can say 1% conversion we saw in the month of December. And the same number would be around 0.75 to 0.8, 8.5, about 6 months back.
Got it, sir. I think this is very, very helpful, sir. Thank you so much, sir. Thank you so much, sir.
Thank you. Thank you.
Thank you. Ladies and gentlemen, that was the last question. I hand over the call back to the management for closing comments. Over to you, sir.
Thank you. Thank you, everyone, for joining us on the earnings call for FINO Payments Bank. We continue to grow our businesses. 1 minute. So we see good momentum in our transaction business, and we'll continue to see the growth on our transaction business. This is resulting in a good pull for our platforms, and which results in higher acquisitions of CASA, as well as we see a higher footfall on CMS products. CMS business continues to grow. We both in terms of the new customer and the kinds of customer additions which we are doing. Specifically, if I look at the logistics, e-commerce, and companies on CRAs. So diversifying of client base on CMS as well as higher throughput. Our initial journey of converting customers from offers to honors has played out quite well. Converting them into digital and UPI volumes growing, as you can see, more than 5,000 crores in 1 quarter, which was a very, very small number about 6-7 quarters back, is very exciting for us. The momentum has been good in this festival quarter. We hope to continue on this good momentum and show good results in the future quarters as well. With this, I hand it over back to Inba.
Thank you very much, sir. Ladies and gentlemen, thank you for attending the conference call today. If you have any further queries, please send an email to sayantan.mitra@finobank.com or gaurav.g@conceptpr.com. Thank you for your participation. You may now disconnect your lines.